Welcome. You're watching India Market Close and a very happy Dhanteras to all of you. Not a very happy day in the markets, to be honest, except for financials. The entire story today about the financials and the bank Nifty, because the rest of the market seesawing in a range. Nifty at least back in the green, but pull up the intraday chart of the Nifty and you'll get a sense of what a volatile session this has been. Look at that, all over the place. Nifty actually close to the day's high now, so at least we can hope for a better afternoon session perhaps at 24,413. Let's pull up the Sensex and then the heat map as well, just to give you a sense of how markets have been going. Bank Nifty really is the only saving grace, and you should pull up the sectoral indices and give you an idea of what's happening there. Bank Nifty surging about 2% up. State Bank of India is the big champion there, which is why you're seeing the Nifty PSU index up nearly 3%. The finance, bank, private banks, all about financials today. A smattering of good news as far as public sector stocks are concerned. But the tough ride today comes from the autos. Maruti numbers not quite what the street was hoping for. 2.5% down on Maruti. Pharma stocks also hurting. Cipla numbers out right now. And seems like a beat on most fronts versus estimates, but Cipla, the stock not doing too well in trade, about 1.5%. Pharma all over not doing great. Let's pull up the heat map very quickly and just give you a sense of what's happening there before Hersh comes in for the broader markets. And this is the pain point. Look at all of auto, but Maruti numbers, they're hurting. We'll get you a deep dive on what's not worked for Maruti, but nearly 6% down on Maruti at this point. Tata Motors also 5% down. Hero Motor, Bajaj Auto, all of the auto pack. M&M, which was showing some signs of promise, has gotten knocked down today. So auto, pharma, look at a Dr. Reddy's today, look at a Sun Pharma, look at, that entire pack is hurting. Bharti Airtel, decent set of numbers, but the change of guard and really the succession that has been put into place in terms of execution seems to have spooked the street a bit. So Bharti down about 1.5%. But on the winning side, brokerage notes have moved BEL up. So that's why you're seeing that shining up there. State Bank of India, like I said, is the champion really, and keeping the markets on even keel and the Nifty on even keel. All of the banking space, look at insurance as well. SBI Life, HDFC Life, ICICI Bank, all of that doing fairly well. NTPC still, seeing the benefits of maybe shareholder quota. NTPC Green has got its nod for an IPO, so that's working well as well. Let's pull up the advanced decline ratio before Hersh comes in for the broader markets and gives you a sense of what's happening there. Well, we're getting a little bullish now towards the end, but it's close to call. This is a tough market, Hersh, by all measure, because you are not seeing bulls managing to hold on. And what's happened with Maruti, I think, is going to increase the fears of a consumption glut coming in.
Yes, so that as well as numbers overall, even outside of Maruti, within the two-wheeler pack, if I stick to auto, but even outside of that, FMCG numbers, not very encouraging. So I think it's numbers heavy in terms of stock reactions as well. First off, on the mid cap and the small cap indices, let's look at the benchmarks first. Largely flat, maybe a slight positive bias on the Nifty mid cap. The Nifty small cap too, very similar in terms of the reaction. So we're seeing a day when the Nifty 50 is largely being mirrored in broader markets as well. That's how it's essentially playing out. Let's pull out some specific names, especially on the back of numbers, on the back of earnings. First off, on my list is Ami Organic. Stock up and away in trade. 13% higher. Also, I'm told the Bharti Airtel press conference is now live. Let's cut across and listen in.
We are proud that all our hyperscale data centers have reached IGBC Gold certification, reflecting our commitment to sustainability in construction. Women participation in Extra also increased 30% in FY24. We maintain transparent disclosures on ESG, and we are proud of our high standards of governance and ethics. Let me give you some highlights of our performance. We delivered a solid quarter. Consolidated revenue of 41,400 odd crores. India revenues were strong with about 8.7% sequentially to just over 31,500 crores. EBITDA margins came in at 54.8%, an improvement of 1.1%. We delivered the highest ever quarterly operating free cash flow, which is EBITDA minus capex, of 11,000 odd crores. Capex for the quarter was 6,250 crores, 60 crores. The strength of our balance sheet is a testament to prudent capex and commitment to trim high-cost debt over time. During the quarter, we prepaid another tranche of DoT spectrum dues pertaining to 2016. In the last 5 quarters, we prepaid over 32,000 crores of high-cost spectrum dues. India net debt to EBITDA now stands at 2.6 compared to 3.1 a year ago. I also want to clarify the position on net debt in India. On a reported basis, the net debt has gone up by 6,000 crores. All of this was related to spectrum that was procured in June, which was received during this quarter. In addition, do note that we paid out 5,000 crores of dividend from our cash generation. We continue to have solid execution and razor-sharp focus, which is the foundation of our consistent performance. All businesses are delivering market share gains. I also want to underscore our effective and simple strategy, which has consistently delivered results. Quality customers, delivering a brilliant experience for them, putting digital at the core, and relentlessly focusing on operational excellence and stripping out waste. We continue to expand our network. We rolled out about 5,000 network sites, over 9,800 route kilometers of fiber in the quarter. We've deployed recently purchased spectrum to turbocharge our network across key circles. We're delivering the best experience in India, and that truly is the obsession for us. So we believe our focus and obsession was endorsed by the recent results in OpenSignal, a crowdsourced network experience platform. Airtel was awarded all 5 awards on 5G network experience on OpenSignal, a testimony done to the hard work done by all at Airtel. A quick update on each of our segments. In the mobility business, we experienced a loss of 2.9 million customers due to SIM consolidation triggered by the tariff repair. But this decline was milder than what we observed in earlier rounds. As we've seen in the past, these trends normalize over 2 quarters, and we've already seen that normalization happen through the month of October. We've already seen a trend reversal with customer adds. We added 4.2 million smartphone customers in the quarter. Postpaid net adds remain steady at about 0.8 million. Flow-through of tariff increase is as per expectations, and we expect the full benefit to be reflected in the coming quarter. ARPU came in at 233 rupees compared to 211 in quarter 1, maintaining an industry-leading growth. At the same time, the ROCE of the India business is still very low at 11.2%.
All right, that was Gopal Vittal and the earnings con call from Bharti Airtel. The CEO importantly saying that he has no intent of looking at anything outside the group. Remember, he will now become Executive Vice Chairman. And was there going to be a big change was one of the concerns in terms of that leadership transition. So an attempt there to quell those concerns as far as the market goes. Remember, he relinquishes his role, his current role only in 2026, after which he moves to Executive Vice Chairman. So that was the Bharti Airtel con call, and we'll get you all of those details. But meanwhile, quick focus on Intellect, Design Arena. The numbers are out. Revenue in Q2 down 8%. EBIT is down 50% at 42 crores versus 84 crores. EBIT margin has also dropped quite significantly, as have net profits. Arun Jain, Chairman and Managing Director, Intellect Design Arena, with us on the show now. Mr. Jain, a very good afternoon to you. And great to speak with you here on NDTV Profit. Wish you a happy festive season. Let's begin by talking about the quarter gone by and where you think the challenges have come from.
Since we are new to NDTV, so I think we need to understand the Intellect story. It's a product story which is not quarterly story. It's a LTM story. So it's the last 12 months which is most important for you to report, and I would advise you to report LTM, not quarterly revenue. And this quarter-on-quarter comparisons are not for product companies like us. So that's the first correction I would like NDTV to look into because of the nature of business. So each license value can be 20 crore to 30 crore, which can shift the margin numbers substantially on margin. So we are not a straight line company. So that's the first thing I want to mention. From the investor perspective, obviously, it is lower than the analyst expectation. There also, I talked to my investor conference that This is where we had one deal which got signed up on 7th of October, but it couldn't be accounted because of accrual norms over there. So these numbers are not meaning anything.
That deal, Mr. Jain, what was the size of that deal which got signed on 7th of October and the accruals, approvals did not come in, or you could not account for it in this quarter?
Yes, close to 25 crore, close to 25 crore deal was there.
Okay.
So that you add back, then it becomes a substantial EBIT margin will change, and EBIT margin is on consolidated basis. I think you are showing the showing individual numbers of a standalone number.
What is your EBIT margin on a consolidated basis then? We're giving you a consolidated EBIT margin Q on Q, which has come off from 13.9% to 7.5%. I take your point that you would like to be seen also annually. We'll put those numbers out as well, but all metrics are there for all of our viewers to see. Just trying to understand the form and feature of what has happened this quarter.
So this quarter, nothing special happened. I think we moved our focus to advanced market, and it's taking longer time to close the deals. So we have a very healthy pipeline of 18 different deals, 10 in GTB, 5 in GCB, and 3 in AI. We launched Purple Fabric as a big platform. So a lot of action happening on the company side, which will drive next 3-year revenue substantially quarter on quarter. We looked at it that in next 3 to 4 quarters, how our quarterly revenue could be close to 700 crore from 600 crore kind of a numbers, where the margin can be about 25%. So these are the few metrics we are driving us. So our growth will come from eMAG.ai, which is one of the disruptive technology we are building to banking world to modernize their platforms. We have a Purple Fabric, which is the AI platform, which is competing the best in class Palantir products in the world. And these are the things which is going to bring the right value over the period of time.
Okay, just one more point. What is your average margin expected to be at? We've seen a 7.5% this quarter. You're saying don't look at me quarter on quarter, but what is the kind of margin that you aim for? And when you're saying you have 18 deals in the pipeline, where will it land?
EBITDA margin for us, we are planned for 20% plus, which can do 25% to 30% year on year. So 26, 27, 26 it should be 25%, 27 it could be 30%. So those are the numbers which we are looking at.
Right, and Mr. Jain, if I understand that right, that is largely going to be driven by top line, you acquiring clients. Where are you going in terms of, is it different geographies that you're looking at? Is it the India potential itself which is looking so bright? And where does your top line therefore go in the next 2 to 3 years?
Yeah, if you know the business, I think we are a software licensing firm which we are selling to the largest bank in the world across the geographies. And we have a big market in UK, US, Canada, are the major markets for us, besides Asia Pacific, all the large countries, including India. So I think we operate on 23 different countries where largest bank using Intellect as a basic platform. So our margin growth, which we are looking for, is how do we modernizing the banking system? So banking technologies which are available globally are at least 30 years to 50-year-old, and that is something which requires significant shift to newer technology, and that's a big opportunity for us to play in that game of modernizing the technologies for the banks in Europe and America. In last 6 months, last 1.5 years back, our focus is to shift. We shifted 2 pivots. One pivot is around the geography, which is Europe and America. The second pivot is around distribution. So our technology, which is available on the cloud, is available for our system integrator partnership. So we started the work on system integrators who will drive the sales revenue. And as soon as sales revenue got expanded, the margin is because our cost increase is not more than X%. Our revenue, if it goes 15%, we get 25% put almost improve the bottom line.
Understood, sir. With regard to R&D, because that will hold the key, and I also want to talk a little bit about competition while I'm on that R&D point, because that will determine how many clients are willing to come to you with regard to accepting your services. Just talk to us about the competition environment as well as how much you spend on R&D to actually stand out in this market.
Yeah, good question. The two things are there. One is competition. Competition, if you look at it, a lot of investors may not be tracking. There's a company called Palantir, which is a $50 billion AI company. They sell AI platforms. Is a one kind of a company. There's a company called Thought Machine and Temenos in the core banking space. There's a company called Finestra. So we compete in all these four companies becomes a critical area in which we compete with them. And for competing with them, we have a largest R&D team in the country. We have 1,200 engineers in research and development. It's 20% of our workforce is put only on R&D. So this is the biggest R&D we are working over the last 10 years. And this R&D is driving the development of those technology licenses right now, which we are able to compete head on with a very large, 5 times or more investment like Thought Machine is making or Temenos is making. But we are able to win those deals against them in a global marketplace like OTP deal we won 3 quarters back against Thought Machine and Temenos. Is because of the pure technology architecture and research what we are doing in AI. So we are putting composable and contextual technology for banking where they can modernize their technologies at certainty and with a risk-free kind of implementation. So that's each project could be in run of 100 crores to 500 crore each project. So those are the kind of a nature of projects are there. So that's why the quarterly number doesn't make sense.
Sure, sir. So even when I'm looking at it trailing 12 months, your top line is roughly 2,400 crore versus the 2,500 crore at the end of FY24. I want context as to where this top line goes because my understanding of it is that is what will drive margins. So your margin number of 20 to 25 odd % will come only when top line is driven higher. Even when I'm looking at your FY23 numbers, your top line was at 2,230 odd crore. So just trying to understand where your top line will be a year or two from now to try and therefore get context as to whether you'll achieve that margin number. Give us that.
Yeah. So one of the things is there was since you are new in the, so GEM revenue was there. So if you're tracking the company, there's a government e-marketplace revenue, which is we close that project by December. So that number goes out of the top line. So that's a ex-GEM revenue we are talking about this year, all the talking to investors. Second point is how this top line will grow. Our design the company with a business of 15 to 20% growth year on year. So that's how the business is being designed for. Sometimes we achieve 10%, sometimes we achieve 18%. In last 8 years, we achieved 15% as a CAGR on year. So that's where the company is headed to have a 15% growth year on year in next 5 years.
Understood. So point taken, 15% kind of top line growth expected, 20 to 25% margin. Thank you so much, Mr. Jain, for coming in and giving us that perspective.
You know, thank you, Mr. Jain, and appreciate you speaking with us. So I must say that I think numbers have to be looked at from all perspectives. We speak to the management to get their point of view.
Yes.
But if there is such a sharp decline quarter on quarter, it's only fair to go back and understand why. The trailing 12-month operating margin is also at 19% shy of what they've clocked in FY24. Having said that, robust pipeline, so that's important. Let's talk Maruti. The management is speaking right now, and we'll just get those visuals up for you before we get the audio on of Mr. R.C. Bhargav. But it is a stock of the day, not for the best reasons. Maruti reported a 17% year-on-year fall in its net profit for the second quarter, whereas revenue remained flat amidst a decline in domestic sale volumes and slowdown in demand. Puneet is joining us. Puneet, what are the key pain points as far as Maruti is concerned?
Yeah, definitely. It's one of the key concerns that, profits are around 17%, but this is largely not something that's wrong with the business per se. It's a one-time expense that the company has taken on the back of deferred tax assets. Now, deferred tax expenses for this quarter was about 1,000 odd crores versus 67 crores on a year-on-year basis, and that's due to a provision that the company did of about 837 odd crores, resulting from a withdrawal of indexation benefits on debt mutual funds that the company invests in. So this was a new provision that was introduced in the finance Finance Act of 2024, and that's one of the reasons. So it's an accounting charge, not a cash charge, and not related to the business. Now, while the revenues were expected to be subdued, and that's because of the volumes of the company, largely in this quarter they sold roughly about 5.4 lakh vehicles, and that's out of that, domestic volume was 4.6 lakh, which was down 3.9%. So we knew about the sales, and we knew that the results are going to be flattish on a revenue basis. While the EBITDA margins is one of the key things that's also been disappointing this particular quarter. It's down 7.7%, and that's largely because of higher raw material cost to sales. Now we'll wait for the earnings con call of the company to get in the exact details of which kind of commodity cost, or was it something else related to the cost, but that's one of the key things as well, which was a key concern. Currently, the pressure is also on.
Let's listen into them. Puneet, let's listen into them. Maruti's management is speaking. They're briefing media post the Q2 earnings. Let's listen in.
Fluctuates. And I would get very worried if I was asked that, do you expect the market to always remain steady? No, I don't expect the market to be steady. I expect it to fluctuate. We have had some good periods. We have also had bad periods in the past. We are a company which has the strength to ride over bad and good times. We have shown that in the past, that we are very resilient. We can manage bad times. We can manage good times. So this slowdown at the moment does not worry us unduly. I don't think that we have enough data to tell us whether this slowdown is going to last for a long time or is going to last for a small time. Certainly, the fact that the market, let's say under 10 lakhs, is not growing, in fact, it is declining, that's a cause of some worry. Because unless that lower end of the market grows, there is going to be no, what should I say, feeders into the upper market. And the under 10 lakh market at one time in 18-19 was 80% of the total market. 80% of the cars sold in India in 18-19 were under 10 lakhs. That market is not growing at the moment. That is a cause of worry. It's not the overall slowdown, but it's the segmentation which has happened. The fact that growth is taking place only in the more expensive cars, I think that doesn't make me very happy.
Yeah, actually, that was my second question, that, somewhere, even if the market is growing, the customer acceptance for Maruti and premium cars is not there. If you look at Invicto, if you look at Jimny, somewhere there is a hesitation when it comes to adoption of cars from Maruti Suzuki stable. Does that also worry you, apart from the slowdown that you mentioned in the under 10 lakh category? In the premium people...
Pankaj, your analysis does not take note of the fact that we still have about 42% of the retail market. If customers were not happy with Maruti cars, and you mentioned Jimny, which was never supposed to be a mass volume car, as one of the vehicles, in the Invicto, which is the upper topmost market. You've taken two very extreme examples. They don't signify Maruti. Maruti has a lot more other models, and that is why we are constantly maintaining around a 41, 42, 43% retail market share.
Okay. So you don't feel that's a cause of worry right now, or because most of the volumes are coming from under 10 lakh kind of cars right now?
The volume is not coming from the under 10 lakh market. That market is declining actually.
No, for Maruti, the market share, sir.
Yeah, even for Maruti, we have volumes there, but the growth is not happening because of that.
Okay, so that was R.C. Bhargav talking about, and very important points that he was making there on what is concerning him about this slowdown. And he terms it as a slowdown. He says a slowdown could be transient, but what is concerning for him is that growth is coming in premium segments and not in the lower end segments. And that is what he finds concerning. Ajay Bagga, market expert, joins us now on the show. And Ajay, so glad to have you here on NDTV Profit. Couldn't think of a better time to talk to you, because I've been looking at all of your tweets on concerns in the auto sector. Lo and behold, we have Maruti's numbers. We're just listening to Mr. R.C. Bhargav. And if I put for a minute aside the tax hit because of indexation changes, etc., of 800 crores, and I keep that aside, even then, when you look at the numbers, do you see a problem?
Yeah, there is a problem of volumes, Tamanna. Post-COVID, we saw the passenger vehicle numbers going up. Two-wheelers were dragging. And we were expecting that, especially the entry-level cars and what Mr. Bhargav was mentioning, below 5 lakh, below 10 lakh level, they are having problems. And that's a countrywide issue. Because you can really segment the consumption basket of India or the consumption segments across the incomes. And the income segment, which would be buying these starting level cars, is finding a lot more difficulty. That's what RBI has been warning about, the leverage on the consumer balance sheets. That's what we are seeing from the microfinance lenders, from the unsecured personal loan numbers that are coming through, some amount of trouble on the credit card loans also coming in. So when you have a consumer who's becoming leveraged on a structured, formal basis for the first time in their lifetimes, and then you have a slight slowdown in the economy, this is what is coming through. So the discretionary spends are going slow, and especially in the passenger vehicles, what I wrote yesterday, nearly about 80 to 85 days of inventory. Now that is seasonal, before festival season, normally dealers, ratchet up their inventories. But this time around, the movement is not happening. You can say the dates changed for Diwali. Diwali is a little later. So the festive season shifted, monsoon, unseasonal rains. All those things can be explained if it was a 1 month phenomena, but now it has been going on for 6 months. So there is some trouble in the passenger vehicle segment. And we are seeing this with the market leaders' numbers.
Okay, so that's Maruti. Tata Motors having a tough day today. If I look at the passenger vehicle players, Ajay, Tata Motors, M&M, Maruti, with this trend cementing on premiumization, who is best placed and who is worst placed? And then let's bring in Hyundai, just listed, and maybe bad timing for the listing, but how do you think they're all placed?
Yeah, what is the basic problem? The models are very outdated models. We don't get the best-in-class, superior quality models in India. Second, the tax levels are very high. Third, the running costs are high. So EVs, you keep aside, that's a very small segment, and those are the rich people who buy, and they have chargers put in their basements and in their villas. But otherwise, EVs have not really made a dent in the ice. So overall, the issue is this, that post-COVID, people went for bigger cars. They realized they need to have wheels with them. The gig economy models got questioned. And we saw a 2-3 year of upsurge. But the costs of the automobiles have gone up. Second, the quality given to the Indian consumer is still, not up to the mark. The third is the high taxation, the very high taxation at every level. And that leads to an end product, which is very costly. And what had happened in India was the EMI revolution. So people were really looking at that 10-20% down payment and then looking at the affordability of the EMI to run with the cars. What changed after COVID was moving up the premium ladder into SUVs and mini SUVs. And we saw more premium cars being sold than entry-level and mid-level cars. Now we are seeing a slowdown across, and especially in that 10 to 25 lakh segment, there is a huge slowdown. and dealers are not able to get rid of inventory, and dealers are sitting on, Tamanna, something like 80,000 crores of inventory. Now, companies do help them by giving soft guarantees and getting them soft loans.
Absolutely.
But it becomes a drag.
It becomes a drag. It becomes a drag, and I think the commentary is going to be important in how the stocks are viewed as well. We'll take a very quick break here. We'll come back, talk more auto. But just before we go into the break, Adani Enterprises numbers on your screen. EBITDA has gone from 13% to 16.3%, so robust bump up there. Stock has also seen a spike. Standard disclosures, of course, you're watching NDTV. Profit owned by Adani Media Group. They will be withdrawing the scheme of arrangements with Adani Wilmar. Revenues are up 15% as well year on year, but the EBITDA number at 3766 is where the bump up is coming up 55%, Hersh.
Yes, and profits too doing very, very well. Profit after tax standing at 1,989 crore versus the 333 crore same time last year. So very healthy translation of EBITDA to profitability. At least that's how we're currently seeing it. There you go, those numbers flashing on your screen, 46% bump up where the EBITDA number is concerned. But we'll slip into a short break. On the other side, we'll get you, of course, a more detailed view on how Adani Enterprises numbers are looking, and we'll also get you top buy today, sell tomorrow picks. Stay tuned.
welcome back. You're watching India Market Close. Kush Bora is with us, founder kushbora.com. Very good afternoon, Kush. Some recovery on the Nifty. Let's start with there. Are you changing your mood on the index and Bank Nifty, which has been the superstar of the day?
Hey, hi Tamanna. That's a very good afternoon. I'm very happy Dussehra to you and all the viewers. Well, we did speak of a rebound yesterday. We were kind of lucky to get that, on the day we spoke about it. Today we're seeing a follow through. But no, I don't think that this is, that reversal trend that everyone's been waiting for. This is more of a technical rebound. If I have to give you a slightly distant level, then that level for me is that 25,000 to 25,200 kind of zone, which if it's taken out, then you see any kind of reversal on the Nifty. But for now, if anyone does want to play, sure, you can play the rebound because the risk reward ratio is favorable. Bank Nifty, yes, we have been, rather bullish, especially compared to Nifty, and saves the Friday blemish that was caused by the IndusInd Bank result. The index has been on a firmer footing for sure. We continue to remain, bullish on this one compared to the Nifty. So if anyone does want to take a long trade in a positional way, then Bank Nifty is your index to go about it. The targets on this one will now be 50 to 600 to 53,000, 51, 600, 700 kind of zones will now start acting as your support zones.
Okay, what top picks for this afternoon, Kush?
A couple of them, both incidentally on the long side after a while. ICICI Blue Life has been consolidating with a fair bit of positive bias. Today we're seeing a breakout. The volumes have also finally picked up to our comfort. So the target on this one is 790 and 830. 730 is where you place your stop loss. Another one from the financial space is Ganesh Housing. Had a very rather stark rubbing with a host of other stocks in the market, but the recovery on this has been very encouraging. So from a near-term perspective, Ganesh Housing for targets of 1,050 and 1,090, and your stop loss comes in at 970.
Okay. Ganesh Housing on Kush Bora's radar, and we'll talk more about that as well. But let me get back to Ajay Bagga, and we've been talking markets, we've been talking about the kind of results season we're having. And Ajay, let me come to you on that. From the results we have so far, and of course some more to go, would you say that you're feeling more confident or most confident about the BFSI space?
Yeah, BFSI has got multiple drivers. One, the profitability was expected to be average, and the markets were discounting it. If you see on a 1 year, 3 year basis, we have had underperformance. Second was there was a big overhang of FI overweightage on the financials in India, and that has got sold into continuously. And once that becomes more near to an equal weight, you will see that the intensity of the sell-off in the financials reduces. The third big part is the markets have already discounted in a slowdown in the BFSI pool of earnings. And now a lot of stocks in the sectors that comprise the entire financials are looking valued quite fairly. So we are expecting a lot of domestic money to really bid up this sector as the first sector. And in terms of sector rotation, we are expecting more domestic money to come in, fairly valued, good sector, well-run sector. And right now, we are looking at a very good NPS, except certain segments that I mentioned earlier, MFI or personal loan segments. There is some incipient trouble coming up, and markets have been quite harsh in hitting those particular companies. But overall, there is a good investment thesis for the top private banks, for the top PSU banks as well, asset managers, brokerages, insurance companies, especially life insurance companies. I think there's a big gamut of companies in this financial segment. And then NBFCs as well, the top-end NBFCs who have a good funding base. I think all those are there. What will change things a bit will be as and when the interest rate cut comes, then there is a NIMS compression that comes in. But I think a lot of it has got factored in already in the sell-off that we saw in the BFSI. And now they're looking well set for the next 1 or 2 years run.
2% move on the bank Nifty, Ajay. As we are speaking about this, I want to also take in your view with regard to how long do you believe this cycle will last? Is it going to be a shallow cycle, maybe a quarter or two in terms of pain, or do you believe that it's going to be slightly more longer drawn?
Which cycle, Hersh?
The cycle with regard to both MFI, microfinance lending, where there have been problems with regard to asset quality, as well as unsecured lending, where asset quality problems have arisen.
See, what happens is you have to let the credit books mature. And what happened post-COVID, there was one-way growth, especially in this unsecured lending. And MFIs, we have had now about 15 years of historical experience, and we see the cycles, and the cycle is turning down. And you add on, the other, say, the leading indicators data that you are seeing, the reduction in the demand, or the demand being sluggish. You can't say reduction, but say urban demand is growing at 4% per annum, rural demand is growing at 5% per annum. And it's a country with 60% GDP on the expenditure side is made up of private consumption expenditure. The big factor, I think, which will change between half one and half two of the year is the government spending. Because of the national elections, we lost out about 3 to 4 months of government spending. That will come back. But to make up the budget numbers on the infra, for example, Hersh, we need 40% year-on-year growth for the next 6 months, starting from October 1st. So 40% is not going to happen. So you will see some amount of drag on meeting the budgetary numbers. That is having an impact on the broader economy, because you have come down in terms of inflation. So the nominal growth, which could have been, say, 12%, is probably trending towards 10.5%. And that has its own issues then. So the big problem is probably corporate profitability-wise, margins-wise, we reached a peak maybe in the last quarter. From here on, it is flattish until we get some catalyst. What you need is some counter-cyclical measures, both on the monetary side and the fiscal side. Right now, both are lacking. So the RBI is very concerned about the fiscal deficit and letting inflation get out of control again. Food inflation is an issue. Those correlations with the higher interest rates are not there anymore. But the central banks are still modeling based on that. The fiscal spend has happened in the July budget, and the government is saying too soon, and we are going to spend now. Let's wait and watch 3 more months. So we might lose some amount of traction in not taking these counter-cyclical measures. That would be my thoughts on this. So how long is the cycle? I think on the vulnerable segments, you might see a little more trouble. The good news is the banks and the lenders have been very fleet-footed. If you see the banks which had bad numbers, they took extra provisions, and NBFCs. Right. A couple of NBFCs wrote off their entire personal loan book. So, you have had people taking upfront measures, Tamanna. So that is a good thing. And you have the capital. You still have a 22-23% capital adequacy ratio.
That's one way of looking at it. It's an interesting way of looking at it. At least there is alacrity and there is quick response to clean up. Let's just focus on Federal Bank for a second. They had a relatively decent quarter, highest ever quarterly profit. We spoke to Hersh Duggar, the executive director, and here's what he had to say.
The quarter has been good on quite a few counts, whether it's profitability, asset quality, coverage ratios has been actually quite good. And while the outlook in some sectors, the unsecured, if you're asking for the outlook for the sector, right, going forward. So we do see the continuity of that in terms of asset growth and quality. I don't think we are diverging over here. We are definitely more conservative at this point of time and tightened our credit filters to ensure, given the environment around us, especially in the unsecured retail, to ensure that there are no slippages. And that's what has helped us. We expect to continue the same levels of growth, both on asset and deposits, and maintain our asset quality.
Federal Bank up 8.5%. You're also seeing a good, if you can pull up the intraday chart, you're seeing good traction on the Nifty 50 as we speak, gaining. And a lot of that is led by banks. There you go. We're at the day's high where the Nifty 50 is concerned, and a lot of that led by banks. Let's pull up the Nifty Bank. That one is up 2%. Before I go, those are the contributors, of course. You can see ICICI, SBI, and HDFC contributing significantly to those gains. 250 points, out of which maybe 140 contributed positive by those three alone. And there you go. You've got a Federal Bank sitting up top where the Bank Nifty is concerned. But outside of that, contributions across the board on the Bank Nifty. Only a Bandhan and an IndusInd in the red. So that's how it's playing out, Tamanna.
Ajay, you would buy a Federal Bank right now, an ICICI, Federal and SBI. Would you nibble at any of them?
Yeah, definitely. The private sector, the top 4-5, and the public sector. We have had very good numbers, and it's going to get better from here. So a lot of the banks have moved into secured lending in terms of building huge mortgage books on the consumer side. And the RBI, to be fair to RBI, since the last 1.5 years, they have been sounding warnings that don't build up unsecured books. And secondly, the public sector banks and the top end private sector banks have each seen multiple cycles. What is risky is new NBFCs, especially the digital NBFCs, which have lent a lot. Tamanna, those models work very well in theory, but the models break down at either if there is too much leverage. Second, if there is some political move, as usually happens on MFIs, where they're not allowed to collect, or some government comes in during elections and offers farm loan waivers, and all loans are not paid then. And it's very difficult to collect in those rural areas unless you are lending into groups. And the groups of 8-10 self-help group members take on the joint responsibility. So there are keys to it. And we are seeing that, all the MFIs which became banks, you're seeing the drag there. You're seeing NBFCs which were largely MFI focused or unsecured loan focused. You are seeing incipient trouble. As I mentioned, the good news is they are taking provisions upfront, and that should help. But you need counter-cyclical measures. I think aggregate demand is going down. That 4-5% growth post-inflation means hardly any growth. And with food inflation so high, you need some amount of money to be injected, some pump priming to be done, either by the RBI or the government, if not both of them together. That right now is lacking. Maybe we'll get that in Jan-Feb with the new budget only. And we will lose 3-4 months in that scenario.
Okay, HUDCO numbers are looking good. Total income up 34%, net profits up 52%. Look at the spike in that stock, about 8.5% up on HUDCO. Kush, are you excited about HUDCO? Are you excited about Federal? Any of these banks that are on your radar, or you take profits off the table right now?
Oh, no. In fact, Federal Bank, if you have a positional view, you're right, because, the move in the stock for the last, about 8-9 months or so, has been, rather staggering. Perhaps a month or so where it was consolidating, but if you're willing to look past that and have a positional view, then I think, this uptrend could continue. Mild resistance around the 205 levels. Once that is taken out, you're looking at a 225, 240 kind of move as well. So very constructive on Federal Bank. And, given the positive view that I have on Bank Nifty, this will surely be one of the contributors. HUDCO, yes, it is now breaking the trend line resistance, also moving past the 20-day moving average. So I think there's some spark in this. The volumes have also picked up. So I think this could be considered for a long trade. 235 and 250 are your targets to look at on the upside, and on the downside, the support zone, or the resistance zone rather, of 205 will now start acting as the resistance, or the resistance of 205 will start acting as a support. So HUDCO, good move on the whole. Momentum has sort of picked up. So from a momentum perspective, HUDCO, and a positional trade on Federal Bank.
Okay, so HUDCO, Central Bank. What about Sirma? What are you feeling about Sirma, Kush?
The entire pack had a very good run. Just the thing is that, the kind of moves that it has seen over the last 2 days, more of an emotional trade rather than a realistic one. The risk reward ratio will not really be as favorable because the resistance for this comes in about that 515, 520 mark. So the bulk of the gains that were to be made on this rebound trade have been made for now. Any long trade for this one should be considered beyond 525. Now, do you go out and book some profits? I wouldn't suggest that as well, because close to the end of the day, stock at the high point, clocking staggering volumes. So you should rather ride this one with a stop loss at 485, 490 kind of levels. But fresh trades, as I said, from a risk reward standpoint, doesn't really make sense. So ride if you have it. For a fresh entry, you might want to wait up for some time.
Another stock that's kind of made a U-turn since the morning is Suzlon. In fact, since early morning, it made a U-turn. If you can pull up the intraday chart, there you go. It started off higher, but we're now at just off the low point of the day, 3% lower. Suzlon, now back of Q2 earnings, of course, Varsha's here with the key takeaways on what likely is keeping that kind of softish reaction on the stock today.
Well, thanks Hersh for that. So if I just want to talk about numbers, so revenue was up 48%, but there was miss in front of margin, and net profit was up 96%. Now if you see, according to Nuvama, now a company posted slightly below expected execution at 254 megawatt versus 275 megawatt estimated, which was impacted by monsoon. So Q2 is actually very slow when it comes to execution, but the execution was actually very slow versus what was expected. Now, if you see, operating margin were lower at 14% versus estimation of 16%. Now, this was due to one-off costs like ESOPs, then SAP upgrades and office leasing leading to a 30%. Now, also, there was a miss on the PAT front side also, but the good thing about the company, which Nuvama has also highlighted, is that they've got a strong order inflow of 1.57 gigawatt, bringing order backlog to a record high of 5.1 gigawatt to be executed over next 18 to 24 months. Now, management is anticipating execution to rise in H2, forecasting 1.6 gigawatt execution by FY25, and EBITDA margin, which is at 14%, is expected moderation due to the ramp up and costs like Renom acquisition and IT investments as well. Now, the adjustment made for FY25 and 27 projections, according to Nuvama, include Renom acquisition and ESOP expenses. But overall, if you see, Nuvama is actually positive on Suzlon's long-term prospect with expected uptick in orders and EPC market dominance, and they are also maintaining hold. If I were to talk about the order book of Suzlon, the wind order book stands at 5.1 gigawatt versus 4.7 gigawatt as of September 24. 54% of the current order book is from captive, retail or commercial and industrial segment. 24% is from central and state auctions, while 22% of the order book has a EPC scope, and 91% of order book is for the S144 wind turbine model for the company. So a few misses here and there, and the slow execution is what that's the reason we are seeing pressure in the stock.
Okay, all right. Quick BTST call from you, Kush.
Well, LIC Housing Finance is looking good. Again, a high point of the day towards close, a good sign for a BTST trade. 645, 660 are your targets. On the downside, you're looking at the stop loss at 620. So LIC Housing for a BTST trade.
Ajay, any one top call? I know you will not give a daily call, but any one company that is on your radar right now?
I think the top end private sector banks, Tamanna, that's the big opportunity that we are looking at. And the top 3-4 public sector banks. I think on a 1 year basis, you will get pretty good returns there.
Okay, so banks in focus. Thank you so much, Kush and Ajay, for speaking with us today. But let's shift our focus to Adani Ports. Earlier today, the company came out with their second quarter numbers, logging a 42% rise in profits for the first half of FY25. Here's what Ashwani Gupta, CEO at Adani Ports Special Economic Zone, had to say on the quarter gone by. Listen in.
During H1, PAT grew by 42%, driven by 11% year-on-year growth in ports revenue and 17% year-on-year growth in logistics revenue. We reiterate our FY25 cargo guidance of 460 to 480 million metric tons and are well placed to hit the upper end of our FY25 EBITDA guidance of rupees 18,000 crores. Our cargo volumes grew at 9% year-on-year to 220 million metric ton during H1. Our planned new capacities are on track. We just closed the acquisition of the Gopalpur port and are on track to commission Vizhinjam port in Q3. Our Colombo port is also on track to be commissioned in Q4. As we plan new capacities, we continue to focus on improving throughput and efficiency across existing ports and are confident of hitting our cargo guidance. We also strengthened our marine fleet by acquiring 80% stake in Astro Offshore, adding 26 offshore vessels to our existing fleet of 142 tugs and dredgers. We saw 17% year-on-year revenue growth in our logistics business during H1, while delivering 26% EBITDA margin. We are focused on expanding our logistics footprint at a pan-India level to ensure last-mile connectivity. As part of this initiative, we saw growth across rakes, MMLPs, warehousing, and truck assets, along with an increase in our agri silo footprint. Our warehousing capacity crossed 3 million square feet. During the period, our TEO rail volume, GPWIS volume, and container volume handled at multimodal logistic parks grew by 11%, 20%, and 21% year-on-year respectively. We increased market share driven by new customer acquisitions, new circuits, greater proportion of end-to-end solutions, and efficiency enhancement by digitization. As we pursue a high-growth trajectory, we remain committed to financial discipline. As on 30th September 2024, our net debt to EBITDA stood at 2x. We became the first private infrastructure operator in India to be rated AAA by 4 domestic rating agencies. And finally, we pursue growth hand in hand with sustainability. We are pursuing multiple initiatives, including running our ports on renewable energy in the near future. Our efforts are validated by external global agencies. S&P Global Corporate Sustainability Assessment recently ranked us in the 97th percentile within the transportation and transportation infrastructure industry. Overall, business momentum is extremely solid, and we are well positioned for a strong FY25. We are committed to building world-class sustainable transportation infrastructure that accelerates India's growth journey and delivering best-in-class integrated transport solutions to our customers.
Okay, about a minute left for markets to shut, and what a turnaround we have seen. Let's pull up the Nifty intraday. About 0.5% up. You're looking like you're closing strong after what has been a very, very choppy day. But the hero of the day, I have to pull up the Bank Nifty intraday. What is happening with the Bank Nifty? Nearly 2% higher, close to the day's high. I mean, banks powering, and how? All of those concerns about credit quality, deposit growth seem to have evaporated very, very quickly. We'll pull up the heat map before Hersh goes to the broader markets as well and look at whether that picture is changing. It's all about banks. SBI roaring 5%. I mean, that kind of strength that we're seeing. BEL, of course, a couple of very positive notes over there. I'm interested in seeing iShares over here. When that entire pack is languishing, iShares doing well. Adani Ports on the back of numbers, doing well this afternoon. So is Adani End on the back of numbers. 55% uptick in EBITDA year on year.
3% on ICICI after yesterday's move, Tamanna. Just want to highlight that.
No, absolutely. The private banks are really the ones contributing. Maruti, Tata Motors, Hero Motor, all languishing there at the bottom. Yeah. Bajaj Auto as well. Now remember, the commentary we've heard, and we'll be getting an opportunity to speak with Mr. Bhargav in a while from now. You'll hear that conversation tomorrow. But the commentary is very clearly not positive. That's something you heard from Bajaj Auto as well. I just want to pull up Nifty contributors for a second, just to see where that power is coming from? And it's all ICICI Bank.
Yeah.
ICICI Bank, SBI, HDFC.
So 100 and maybe 25 points out of 230 are just these three banks. That's all.
Just these three banks. But what's interesting is even in the broader markets, it's all about BFSI, isn't it? This is not just a Nifty story today.
Yeah. It is 0.8% on the Nifty mid cap. Wow, what a jump from those lows, right? Done very, very well. We've closed at the high point. Going to be very interesting week going forward. By the way, these are your top gainers, top losers. A lot of them, especially something like a Hudco, there's those last minute moves on the back of numbers. Gillette up 10%, Federal Bank up 8.5%, JSW Energy too. So a lot of those moves on the basis of how
Symphony numbers were actually good on the face of it. They weren't half bad, but I'm not sure why it's got closed 8% down.
Lower. Yes, Sapphire Foods justifiably 6% lower week set. But anyway, so out of time on this one from Tamanna, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned. More on the other side on NDTV Profit.